Hey guys, it's Max. This is my new show that I'm trying to get started every day. What I want to do is look at these diversified. Well, there's Jackson. Hey, Jackson. I want to look at these diversified high yield funds like blocks and ULTI and K yield and even ULTY and all those. So I'm making a daily show out of it. I did it yesterday and it was kind of a mess, but I apologize. That was my pilot episode, but I thank you guys for watching it. Let's try to see if I can do it a little bit better today. All right, so let's get this report started. Okay, now the first place we're going to go is to my graphic here. So I call these stocks the diversified divas on a bad day and the diversified darlings on a good day. But in any event, this graphic is terrible and I'm working on improving it, but just stick with me for one more day and the show will be a lot better. All right, so this right here is the daily change. This is just the 1 day change. We look at this all the time on my channel on the buffer report, but so this is like a big buffer report. And so what we're using to compare these stocks with is either the SPY or the Qs. Now they're all the way on the right. But the high yield ones are on the left. Okay, so let's see what's going on with these. ULTI is down 1.74. Blocks is down about 3%. ULTI from Rex is down nearly 4%. K yield is down a little bit more than 4%. Unfortunately, WPay is down 3.19. QLDY is down 1.6. Good job protecting capital. Really, QLDY and ULTY are really doing a good job compared to some of these other ones. They aren't even down 2% yet. Ditto for LFGY. But then, unfortunately, GPTY is down about 3%, about as much as blocks and WPay. And Chippy's down about 2.5%, doing a little bit better. And then, of course, we have the SPY and the Qs for comparison. So the Qs are down 1.6. It'd probably be fairest to compare these all to the Qs. So the Q's down 1.6. Really, ULTY looks really good, only being down 1.74. And like I say, ditto as far as protecting capital goes, and ditto for QLDY, which isn't even down as much as the Q's. But then we have some other ones that are falling off. So I also, this chart, I'm working on it, but I also like to just zoom back. So I've been covering all of these stocks since the day that K yield and ULTI went public, which was, I think, the last day of October. So you can look here, every day and just kind of look at the daily results as a whole. We've had some great days where they were all up and made really good money, a couple of times. But then we've also had some really terrible days where they were all down, and lots of them down 5 or 6%. And then we had this day back here where they just basically washed out. That was a really bad day. Then we've had some kind of neutral days, some up, some down. But today is, starting to look like it's developing into one of the bad days. But hopefully the market will turn around here. Now, the 1 day results aren't all that important. What's more important is the rolling total return. How much would have you been up or down in this case, if you would have invested a lump sum on day one? And it includes the dividends, but it's not, I don't include dripping them. I don't include reinvestment of the dividends, but of course we factor in the dividends as part of the return. So let's look at the rolling total return. Okay, and this is the same thing. You can kind of step back and look at it on a broader perspective and kind of see what the whole industry's been doing. But the first day was about, some of them were up the first day, and since then, I don't think any of them have positive return, not even the SPY and the Qs. So let's zoom in though on today's total return, or it's a rolling total return, but let's zoom in here. So let's just, the Qs are a good baseline to compare with. So the Qs are down 6%, rolling total return in the same period. So think about that when we're thinking about these other returns. Let's start over here from the left. ULTY is down 16%, so it's adding an extra 10% from the Qs. That's not great. Blocks is down 26%. That includes dividends. ULTI is down 34%. That's not great either. It's been a tough time. Even K yield. K yield's a good one, but it's down about as much as ULTY. A little bit less. ULTY is down 16, K yield's down 13.5. Good job, K yield. Then we have WPay down about as much as K yield. They're both down, WPay is down a little bit more, but it's protecting capital better than ULTI, ULTY, and blocks at this point. Now, unfortunately, LFGY is looking more like ULTI blocks. It's on the riskier side, or so far it has been, but Bitcoin's in a bear market and has been selling off. So ever since this started, Bitcoin has just been going straight down. So GPTY, now this one's a good one. I made a video about it the other day as an alternative for people that aren't happy with the ULTY. A lot of people are jumping off ULTY and YieldMax just generally. Well, YieldMax has some funds that are still doing great, and GPTY is an example. So is Biggie and Chippy. Anyway, so I didn't put Biggie on here because it doesn't pay a high enough dividend. These are all like high dividends. These are like, they're diversified and they're just, true high yield funds. Chippy's only down 8.2. That's pretty good. Now, like I said, the Qs are down 6, but look, there's one in here we forgot to look at. QLDY down 7.35. It's down just a little bit more than the Qs. That's from Defiance. That's a lightning spread strategy, which is a really interesting strategy. It's based on the NASDAQ. Then, of course, the one that's holding up best would be the SPY, only down about 4%. Okay, so that's the rolling total return. But you can see it's just been getting worse every day, especially on the riskier ones. Blocks and ULTI and LFGY, have just been selling off. So we need Bitcoin to turn around. Okay, so now let's get into the positions. Now, yesterday we just looked at the positions of K yield and ULTI. Like I say, yesterday was the pilot. Well, I'm going to add one more positions every day. So I actually added in ULTY today. And we're also going to talk strategy. Now, this isn't going to be a comprehensive look. For a comprehensive look at these funds, especially ULTY, go to ETF Inspector. He does a daily show and he does a great job. But I kind of want to give a kind of an overview. So let's start with ULTI. I mean, let's get the bad news out of the place first. ULTI is having issues today. So these are the stocks they have right now. They have about 7% cash, but then they have anywhere from 5% down to 4% are their weightings. So we'll start from the heaviest weightings. They have Oscar. They have SanDisk. There's a rumor that's going to be included in the S&P 500 next time they add stocks. They have Lemonade. They have Nano Nuclear, Galaxy, QURE, Unique RE maybe, or I don't know how to say that one. Bullish. They have Bullish. Bullish is bearish today. But anyway, they have 4.7% of Bullish. It'll do great when Bitcoin turns around. Riot Blockchain, it'll do better when Bitcoin turns around as well. SMR, New Scale Power, Solar Edge, Global Star, SharpLink Gaming, taking advantage of the gambling craze that's going on. Gambling and prediction markets and all that kind of stuff are a big deal. All right, then we have Kohl's, the menswear store, and then we have Clean Spark. And then we have Viking Therapeutics, Mara, that's, I believe, a Bitcoin miner. I don't know what this one is. We looked it up the other day. It's some kind of payment or software solution. Pagaya Technology. Anyway, then we have Terrestrial Energy. Then we have some T-bills or some government obligations fund, cash basically. Cash that pays an interest rate, so T-bills. Anyway, then we have Skywater Technology, and our smallest holding is Canadian Solar. Okay, so we can look at how those are doing today. Just on this graph isn't great either. I'll improve this by tomorrow. But on the far right, this is the way I usually do it. I usually put the ETF itself. So ULTI is down 3.3% right there. And you can see right next to it is always the average. So the average stock in their portfolio is down 3.8. So ULTI is doing a little bit better than just going out and buying the stocks. It's showing a little bit of buffer. But anyway, you can see Canadian Solar, it's down 17%. SanDisk. I mean, maybe it's getting put in the S&P someday, but it's probably not today, and it's down 15%. And if they do it, it'll be after hours. So, and then Oscar, you can see it's just kind of a rough day. It'd really be easier to talk about what's up. Solar Edge, bullish, and QURE are hanging on to small gains. All right, so that's it for ULTI. Let's go look at K yield. So right here, I have the K yield. I'm sorry. One more thing on ULTI. I'm still getting the hang of this show. On ULTI's option positions, and ULTI's been doing better lately, and it's because they've started using their option positions to hedge more so than they were the first week. In other words, they sell options. They put kind of a complicated option overlay on top of their stock, so it generates income that they can pay the dividend with. And they've been paying like 80%, about the rate of about an 80% yield. So they've been doing a good job with that. But there's one little change they can make. They use 4 options to get income. There's one little change they can make, and they have made, to callerize their overlay. So a collar is what is generally a collar is where you sell calls to buy puts, and you don't have unlimited downside. Well, ULTY does that, and that's why it's holding up a little bit better than some of these other ones. Well, anyway, these guys have started doing something similar. And the way you can tell is they have they have 4 bullish positions, 2 calls, 2 puts. But you can look over here at the number of contracts, and they have 83, 83, 83, and then 166. So they're doubling up on the out of the money puts. That puts a floor under how much they can lose. In other words, if bullish goes under 33, they're out. They don't have any further losses. They haven't hedged under that point. And let me show you what that looks like here in option strat. Just really quick. This isn't going to be a detailed, but like here's what it looks like. It gives them a formation at closing that looks like this. Where, you remember I said they can't lose anymore after 33. They're out after 33. This is the deal. The good thing about what they're doing is in a bullish market, they do have partially uncapped upside. And this will be a really effective bull market strategy. We just haven't had a bull market in some of these yet. All right, so back to ULTI. Anyway, it's the same thing with all of their holdings. You go through here, 287, 287, 574. So they have Clean Spark hedged under 10. They have whatever. This is that Canadian solar thing that's getting murdered today. Well, they have it hedged under 11, or no, that's Clean Spark, but the CSIQ, they have it hedged off under, well, I can't tell on that. On Galaxy, they have, that's just part of a trade. I'm not looking at the whole thing. They have it hedged. But on Galaxy, they have their downsides limited at 24. So anyway, we could go through that and look at all of these, but they're all cut off at some point. Kohl's is hedged under 15. Lemonade's hedged off under 65. So anyway, that's a big change to their strategy, and I think that's a good change. I'm happy that they did that. And here's actually their stock positions just in a graphical format. But in any event, we've already basically looked at that. So now on to K-Yield. So I did the same report on K-Yield. So here's K-Yield's allocations. Their cash is about the same, about 7%, or money market, T-bills, whatever you want to call it. But then their weightings are anywhere from 6.29 all the way down to Bitmine Immersion that only has 3%. So let's just look at it on graphics. They have Teradyne at 6.29. They have gold miners at 6%. Silver miners, Howmet Aerospace. They have some Broadcom. They have some Vistra. They even have some Intel in here. About 4.8% of the account of the portfolio is Intel. Now, this is managed by Curve, remember. They have a different kind of stuff. It looks to me like they have some different types of stocks than some of these other funds. Anyway, they have BWX Technologies. They have Reddit. They have Advanced Micro Devices, Shift4 Payments, Shopify, AppLovin, Robinhood, Roblox, Hims and Hers, Coinbase, Galaxy. Then they have some other T-bills and Bitmine immersion. But all of these funds do have some common themes going through them. A lot of them hold things like AppLovin, Hims and Hers, Coinbase, Galaxy. And so this one does that as well. Now let's look at their option positions. Their option positions are more complex. They do different things on every position. I don't really have any of these specific that I want to talk about right now. Other than this, you see where it says QQQ and QQQ. This is called a volatility hedge. They put this on a few weeks ago. What they're doing is they're buying out of the money calls and buying out of the money puts. So it's just a bet that the market moves one way or the other, and it's a bet the volatility goes up. And I think this has been a winning bet for them so far. I don't think the market's going to drop. The Qs are going to drop under 570, but even if they get close to there, this hedge can make them some good money. But other than that, they have pretty standard covered calls. Sometimes they don't write all of the options. Sometimes they have a little bit more stock than the options they write. They have really creative stuff that they do, but we aren't going to really specialize in that today. I am going to talk about one of the ULTY trades, though. So first of all, let's go look at ULTY. I realize a lot of you guys aren't huge fans of this, but a lot of people are. I have it, so this is going to definitely be part of the report. But I'm not going to. We're only going to talk. We're only going to drill down on any one of these stocks once a week. Anyway, today's ULTY's day. Tomorrow we'll look at K yield. But anyway, so ULTY, they have a little bit more than 8% cash, and then they go from Palantir at 5.5 all the way down to New Scale Power at about 3. So kind of standard. Now they have Palantir, they have Robinhood, they have NVIDIA, they have Facebook, they have Coinbase. Lately, ULTY's added more blue chips in, like NVIDIA, Facebook. Anyway, they have some more too. Now, TMF, this is a triple leveraged bonds. So this is a bullish bet on interest rates. I think this is kind of a hedge for them, and it's a triple leveraged interest rate play. Now, this fund isn't leveraged, but they're selling options on this one triple leveraged thing. Or they're selling callers, actually. Callers where you sell a call to buy a put. You do it for a credit, you have limited downside, and you still get an income. This conventional covered call does not have limited downside. Conventional covered call, you catch 90% of the downside, 90% of the downside. On this one, on big moves, you catch way less. All right. Anyway, then we have gold, Costco, Rocket Lab, Astera. We have Iron, Google, Materials Processing, Symbotic, Circle, SoundHound, Oklo, Affirm, SoFi, Celsius Holdings. Now, these are kind of a hot mess today. Let's go look at the changes on these. I mean, everything's kind of a hot mess today, but let's look at this. All right. So the blue line is the allocation, and the red line is how much they're down today. So ULTY itself is down 1.5, and the average stock is down about 3. That's that caller strategy working for them. That's why they aren't dropping as fast as some of those other ones. Those other ones don't really use callers, except for ULTI. ULTI is using callers. But in any event, you can see right here, Oklo's killing us. I mean, you can see they're all killing us. Coinbase is down 6%. Rocket Lab. I mean, on the good side, though, we have Iron's up, SoundHound's up, Symbotic's up. And Astera Lab is up. And then there's a few that are barely up. Costco's barely up. That's one of the other blue chips they added. All right. Now, speaking of Costco, we're going to look at, I had a request yesterday to show one of the ULTY trades. ULTY has a new type of collar that they have on here. So I loaded a trade in here that happens to be in Costco. Now, They have a special, what's called a 3-leg collar, but it's an option or thing, but it could also be called a covered strangle. Basically, to bring in income, they're selling an out of the money call. In this case, a 905 call. Stock's trading around 890 right now. but then they're also selling an out of the money put. Okay, now that's the income component. But then they're taking part of that income and they're buying two further out of the money puts. This is an option nerd thing, but I'm just going to explain it really quick. You could see here at Theta. Theta's negative 25. That means this position's costing them $25 a day. When this option that they bought, these puts, they bleed $25 a day, which is a lot considering it just cost them $1.50. So it bleeds off a sixth of its cost every day. Well, that bleed causes something called put drag. The callers were causing put drag. The callers were costing the fund. They were dragging the fund's performance too much on the upside. So what they did to fix this, and Mike Coe talked a little bit about this on the Wolf Spaces, but what they did to fix that is they used to just be selling a call. They didn't sell this other put. They sold a call and then bought a put. There's too much put drag with that strategy. Now they've snuck in, they've sold this extra put right here. Now look at this put. The put they sold is actually positive on Theta. It's a positive 62. Well, so this one is actually bringing in $62 a day. Okay, but now the one they bought is costing $25 a day. The thing is they bought twice as many of the ones that they bought. So this one is costing the fund $50 a day. Okay, but they're bringing in $62 a day from the put they sold. So that is hoping that is the idea with that is it's minimizing put drag. And they still have this one up here, this call, just like they've always had to bring in an income. The sold call is what they pay you the yield with. And if you want to look at the whole trade, the call's bringing in $77 a day. And it's not a day, it's not every day, but it's $77 that day over the next 1 day period. That's the math of it. So that one's bringing in 77. This one's bringing in 62. So whatever 77 plus 62 is how much income the fund's bringing in. Well, then you have to subtract 2 times 25, which is 50. So they're bringing in like 150. They're spending 50, or they have 50 of drag. So they're bringing in about $100 a day in theta decay. Well, that's how they pay the yield. The yield is paid with theta decay. Still need the market to go up. If the market goes up, they do better. But in any event, the theta decay is a thing also. That's how they pay the yield. All right. So I'm sorry if that was too in depth, but let's go back really quick and make sure we covered it all. We'll take one more look at the market that you guys get out of here. So this is ULTI options. I just wanted to show, well, there's really not, we've talked enough about their options, but there's that Costco trade. I mean, they have sold calls and then they have sold puts. The AI messed this up. That's a put right there. I need to have a talk with AI, but that's fine. We know what they're doing. And then they bought twice as many out of the money puts. This right here is a 835 put. So basically, Costco can cost the fund money, but not under 835. We don't have unlimited loss. We can't bag hold Costco under 835. And not only that, because we're also selling another put, it's going to eliminate or mitigate the drag that put normally causes us. It's a genius trade. Okay, so tomorrow we'll drill down on some blocks trade, another stock. I think tomorrow we're going to look at ULTI, K yield, ULTY, and blocks. But we'll kind of get behind the scenes in blocks and see what they're doing. And then the day after that, we'll probably and that's all. I think those are the four main ones I'm going to cover: ULTI, K yield, ULTY, and blocks. The other ones are kind of in there for comparison purposes. All right, so let's look at the market. Then I'll let you guys out of here. I want to make this about a 10-minute video, and it's going over time. I apologize, but thanks for sticking here with me. At least we finally have a green bar on the chart. You know, these are 30-minute bars, and we finally have a green bar from Bitcoin. So maybe we start rallying again, like we did yesterday. What we're trying to avoid is if we start rallying again and get up to the moving average and then sell off. There's overhead supply. Rallies are being sold. Lows are getting lower each time. Highs are getting lower. So we want to reverse that trend at some point. But until we do, it's it's not, it's probably not going to improve very much. we'll see. Now let's take a look at the SPY and see if it's found a bottom here, trying to turn around a little bit also. Yes, and indeed we have. Well, at least we have a green bar. So the SPY, you know, it looks just like Bitcoin. It follows Bitcoin. Bitcoin's leading the market. It doesn't always work that way, but the past few weeks, you just look at Bitcoin and it'll tell you exactly what the market's going to do. Anyway, yeah, so we're trying to mount a rally here. The look we're trying to avoid with the SPY is the same look we had this morning, where we do well and then there's sellers there to come out of the woodwork, and we can't even get over the moving average. Or last week we got over the moving average for like a day or two, then the sellers came back and hit us again. We want, you know, a sustained rally, but we'll keep an eye on that. It's one day at a time. We'll also keep an eye on the pros versus Joes indicator, and you know, this is even worse yesterday than it was today. You could see that this came on, the warning light came on right here on the 3rd of November. It also came on back here in October, and we did have a little sell-off in mid-October, but the warning light came on the 3rd of November, and since then the market has been no good. So we'll see. We keep an eye on that also. That can also help us judge the kind of the pressure on the market from people hedging, and people are still hedging. So in any event, I appreciate you guys for being here. Remember, not financial advice. Also remember, if you like this kind of content, you can always feel free to support the channel at paypal.me, Max Convexity. And in the absence of that, you can always like, you can always subscribe if you don't already, and or leave me a comment if you'd like. All right, guys. Well, thank you very much, and I promise this show will get better, and I'll get it quicker. Also, I'll get the programming better as time goes by. Thank you for being here. Talk to you later.